Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit Equities. In this video, we'll be talking about 3 value stocks which can be invested in now even when the stock market is hitting new highs every day. Now with benchmark indices hitting all-time highs, the stock market is in a jubilant mood. Expected political stability in the country and growth concerns in the US are the reasons. Money flowing to emerging markets like India will increase now due to the expected rate cut and other easing measures by the US Fed. Now, as FPI inflows are expected to continue, the market's large cap bias will remain intact. At the same time, corporate profitability is at multi-year lows and most investors are chasing stocks with visible earnings growth. This has pushed up valuation of large cap stocks. Experts say investors should now scout for value stocks. This is where our video comes in. If you have not already become members on Profit Equities, please click on the blue join button below and follow the steps to become channel members. This entitles you to member-only privileges on Profit Equities. Also friends, if you have not already subscribed to our channel, please click on the red subscribe button below. This will help you get notified whenever we upload a new video. Please watch this video to know more. Now the first stock on the list is Oil and Natural Gas Corporation, which is available at Rs 168.40 and the face value for it is 5. The symbol for it is ONGC. Now Oil and Natural Gas Corporation Limited is a global energy holding company. The company is engaged in the exploration, development and production of crude oil and natural gas. The company's segments include exploration and production and refining. The company's geographical segments include operation in 2 categories, which is India, which includes onshore and offshore, and also outside India. Now the sudden surge in international crude oil prices and inability of PSU oil companies to pass on these additional costs to consumers have revived subsidy fears in these counters. However, analysts are betting on ONGC because its current market price has already factored in these fears. For instance, ONGC's 1-year forward PE is now placed at a 10-year low. The subsidy risk is also not big for ONGC. This is because unlike PSU oil marketing companies, ONGC will only be giving up a part of its possible windfall profit that will accrue due to the spiraling crude oil prices. There was no subsidy burden for ONGC in the third quarter of 2018-19 and it reported a net realization of $66.4 per barrel. So even if the government doesn't allow ONGC to charge the current price of $75 or so, there won't be fall in its net profit. Its crude oil production is on a slow lane due to project execution delays, but its gas production is going on smoothly. ONGC's gas production is estimated to grow by around 5 to 6% in financial years 2020 and 21, according to a recent Motilal Oswal report. Now looking at the 1-year chart, this company has been an underperformer throughout the entire year. The company is a large cap with a market capitalization of 2,11,851.90 crores. The EPS of 22.72 translates into a price to earnings ratio of 7.41, which is dirt cheap when compared with the industry PE of 11.40. The price to book ratio of 1.08 is also not wildly expensive. The company also has a very attractive dividend yield of 3.92%, whereas the promoter holding is also a very strong number and stands at 64.25%. Also, none of the promoters holding is placed. Now the second stock on the list is Bharat Electronics Limited, which is available at Rs 88.15 and the face value for it is 1. The symbol for it is BEL. Now Bharat Electronics Limited is engaged in the design, manufacture and supply of electronic products and systems for the defense requirements as well as for non-defense markets. The company's principal products and services includes weapon systems, radar and fire control systems and also communication systems. Infrastructure and capital goods companies are on the receiving end now due to a liquidity crisis and payment delays. However, these delays have not impacted fundamentally strong companies like Bharat Electronics. It has remained a debt-free company despite payment delays by the Ministry of Defense. More importantly, it is managing the liquidity crisis by taking more civilian orders. As per provisional figures, Bharat Electronics has an annual turnover of Rs 11,700 crores and order inflow of Rs 23,200 crores during 2018-19, which is around 3 to 4% above street expectations. A healthy mix of short cycle civilian orders should be able to offset the Rs 3,000 crore revenue it generated from the Election Commission in 2018-19 and help it to report 13 to 15% sales growth in 2019-20, says a recent IIFL Institutional Equities report. Due to higher share of civilian orders, net working capital cycle of Bharat Electronics is also expected to improve in 2019-20. Now looking at the 1-year chart, this company has also been on a depressing path and a lot of wealth has been destroyed here. Now the company is a borderline stock between a mid cap and a large cap with a market capitalization of 21,478.57 crores. The EPS of 7.46 translates into a price to earnings ratio of 11.82, which is much cheaper when compared with the industry PE of 15.43. The price to book ratio of 2.68 is also not widely expensive. The company has a decent dividend yield of 2.27%, whereas the promoter holding is also above average and stands at 58.83%. Also, none of the promoters' holding is pledged. Now the final stock on the list is Mahindra and Mahindra Financial Services Limited, which is available at Rs 414.05 and the face value for it is 2. The symbol for it is M and MFIN. Mahindra and Mahindra Financial Services Limited is a non-banking financial services company. The company serves the financing needs of population residing in rural and semi-urban areas of India. The company provides a range of retail products and services such as financing vehicles for commercial and personal use, tractors, small and medium enterprise loans, and various other financial products. Now, as is evident from the one-year chart, this company has not really done much and has been on a slow downtrend for the entire year. Now, the government's rural focus spending is expected to increase. Increased government spending will play a major role in stimulating rural consumption, and Mahindra Financial Services will be a major beneficiary. MMFS has also reduced its dependence on Mahindra and Mahindra and has become a company with a diverse loan portfolio. Now, MMFS appears well placed to navigate the demand slowdown in the auto sector. Now, a recent HSBC Global Research report says that current valuation is also close to its long-term mean, appearing to factor in most concerns. Now, the market cap of the company is 25,578.56 crores, which means that this company is a large cap one. The EPS of 25.20 translates into a cheap price to earnings ratio of 16.43, which is much more cheaper when compared with the industry PE of 37.17. The price to book ratio of 2.18 is also on the cheaper side. The company has a debt to equity of 4.1421, whereas the return on equity for this stock is a decent number and stands at 0.1410. The dividend yield here is 0.97%, whereas the promoter holding is just above average at 51.19%. Also, none of the promoters' holding is pledged. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This is also not an article for which we have researched ourselves. We'll be providing a link to the source for this article in the description section below. Please go through the article to build more conviction around your investment decision. Thanks for watching, and if you have not already subscribed to our channel, please consider doing so.